Yo, good morning, Bruno.
Hey Nick, how are you?
I'm good and you.
Good.
Good. So we're back for another PLA and another two questions for today. Bruno, we're going to start with you. Last week we did a little bit of a question on the budget speech, which had happened, and what are some of the changes that resulted from the budget speech. And in particular, you touched a little bit on transfer duty and VAT. Okay, but what we thought we'd do today is ask you just to go into a little bit more detail on transfer duty, on VAT. What are these things? When are they applicable to the clients in the transfer of a property? And what should people know?
So when is VAT payable by a property investor and when is transfer duty payable by a property investor? So the first thing to remember is VAT is a sales tax, right? So people that are running enterprises need to be able to understand when VAT is payable and when as a property investor you're liable for it. Now, because it's a sales tax, it means that if you're providing a service to an individual, sorry guys, if you're providing a service to an individual, sorry, camera, there we go. There we go. If you're providing a service to an individual and you fall within the VAT thresholds, usually you would have to register for VAT. Now, the VAT threshold is increased to 2.3 million Rand, meaning that if you're running an enterprise and your turnover hits the 2.3 million Rand mark, you would have to charge what's called output tax. Output tax is what you charge a client, a potential tenant as an example, and you pay it over to Sars, right? Now, the difference between output tax and input tax is what you get to claim from Sars. So if you as a business owner running an enterprise are now paying suppliers, those suppliers are charging you tax. So they're charging output, you're paying it, and then you go back to Sars and you claim whatever you paid as input tax. So that is how VAT works. It's actually a sales tax. So when individuals ask me what is payable, transfer duty or VAT, you need to remember that in theory, transfer duty is actually only payable once a person sells a property, right? Versus VAT, which is payable during the course of running the business as well as when a property is sold. So VAT has deeper consequences and greater liabilities because it is ongoing versus transfer duty that is in theory once off in relation to that particular property. So now, when is transfer duty payable? When is VAT payable? Again, we need to go back and ask the question, when is a landlord charging VAT and when is a landlord not charging VAT? Why? Because VAT would only be payable if the landlord is actually registered VAT vendor and whatever they are selling, even if it is the property that they're selling off, is in the furtherance of their enterprise, right? If it's not in the furtherance of their enterprise, VAT does not apply. So again, we started looking at the question, does this asset and has this asset created any VATable supplies? Now with property, why this gets complicated is because there is an exemption when it comes to residential property. So even the supply of residential property to a tenant is not subjected to VAT. Simple, right? Residential property, no VAT. Commercial property, VAT. Okay, now it goes back to the first question again. When is transfer duty payable? When is VAT payable? If the supply of the property to the tenant is VATable, like commercial property, then when you sell the property, you would also need to pay VAT on that sale. As opposed to residential property, there is no VAT because it's exempt. The supply of the property to the tenant does not have VAT, so neither does the sale of the property. So no VAT there. But there is transfer duty. And remember, VAT takes precedent over transfer duty. So you first need to determine, is VAT payable? And if it turns out that it is, don't worry about transfer duty. They will never apply to the same transaction, even with mixed use properties. So you first determine VATable. If yes, pay VAT. If no, then you determine transfer duty and you decide whether transfer duty needs to be paid or not. And again, these distinctions are more often found when it comes to residential versus other supplies of properties. So your industrial, VATable, your offices, VATable, your retail, VATable, right? So the only time those aren't VATable is if it happens that the 2.3 million rand turnover does not apply. But again, with property, it's very unlikely because 2.3 million rand turnover is not that high. So it is likely that with those properties, that would be payable. Now, residential properties in the exception. Now, there's one or two little exceptions to this rule, and it's not the norm. So it's not something that most property investors have to worry about. But if you happen to run accommodation that appears to look like a hotel, as an example, or a guest house or Airbnb, where you're providing services in addition to the actual room the person is staying in, one has to now start asking the question, but hold on, is this considered commercial accommodation? Commercial accommodation is basically the supply of this service as a supply to it, and not just pure long-term residential lease agreements entered into for a greater period of time. It's shorter service-based agreements. It's actually providing a service, not just a lettable space to a tenant. And I have this argument often where one actually has to ask, with these Airbnbs and guest houses and the like, is this actually residential letting? Like, they call it short-term accommodation, but is it actually short-term accommodation rentals? Or is it actually the use of a space and a service that's being provided, right? But in any case, from a VAT perspective, this is considered to be VATable. It is commercial accommodation. So in those instances, even if a person is living on this property, if it is deemed to be a commercial accommodation property, that would apply, right? So again, think about this very carefully. Some circumstances, even with residences, if you want to call it residences, you might have that payable. And also, please understand that there are even more exceptions, but I'm not going to go into detail now. We can leave it for next week. When there's a lower percentage of rent that would be paid on these types of commercial accommodation if a person stays over 28 days. But that is rather specialized, so we're not going to look at that now. We'll deal with that at another time, but for now, it's just important to understand when VAT is payable and when transfer duty is payable, and the different types of properties associated with these different types of taxes.
Perfect. Thank you, Bruno.